Thank you very much indeed, Madam Deputy Speaker. It's been a fascinating and lively debate, and I'm very grateful to all members who have taken part in it. As you will be aware, as the House will be aware, this finance bill introduces legislation to enact the digital services tax and to set the scope of the tax. If I may, I will talk about the various clauses and amendments in front of us, and then I'll turn to some of the contributions that have been made by many of the members in the Chamber. Perhaps I can start, though, with the remarks made by one of the remarks made by the Honourable Lady, the member for Houghton and Sunderland South, Shadow Chief Secretary, where she said, I think I caught her words, "We support any proposals to combat tax avoidance." And I thought that was an important statement of principle. I look forward to her exemplifying that when we get to the loan charge. But it also bore out a view which had been given by the Honourable Member for Ilford North in Bill Committee, where he said, the Labour Party takes a dim view of tax avoidance. We believe tax is the price we pay for a civilised society. When people contrive to avoid their tax, they rob and shortchange all of us of the revenues needed for the state to do the essential things it needs to do. And I note that he's congratulating himself heartily from a sedentary position, and I wish I had his self-confidence. It is important to start. I note those just because I think they help to shape the conversation we're having. But it's important to be clear that the digital services tax that we are talking about is not an anti-avoidance measure. There's a kind of tendency to think of it in those terms, but it isn't. It is, in fact, a new tax aimed at a new revenue base, and it is a tax which will levy a 2% charge on revenues that groups receive from providing specific digital services to UK users. Now, the specific services that are in scope of the charge are search engines, social media and online marketplaces. DST will only apply to groups with annual global revenues from these services of over £500 million, and it will then only be charged on those revenues where they are attributable to UK users and only on amounts above £25 million. Additionally, an exemption will exclude online financial services marketplaces from the definition of an online marketplace. It's important, this, because it breaks new ground in what a tax is by seeking to tax UK user contributions. And in that sense, I very much share the views that have been uttered by many of my colleagues, notably member for Thurston Moulton, where he described this as a pioneering tax. It is a pioneering tax. And other colleagues, member for Harrogate and Knaresborough as well, they were right to say that. The digital service tax was announced at Budget 2018 as a response to changes brought about by the rapid development of our digital economy, whose many strengths and weaknesses have been noted in this debate. That digital economy brings many benefits. We have seen some of those benefits on display during this COVID crisis, but it has posed a significant challenge for international corporate tax rules. I thought the Honourable Member for East Lewin brought this out very well in his own debate contribution in terms of the contrast between the international bodies that we're seeking to tax through this tax and what you might call the ordinary shopkeeper in his own constituency. Under current rules, digital businesses can derive significant value from UK users but pay little UK tax. That is because these international corporate tax rules do not recognise this user-generated value when allocating the right to tax profits between jurisdictions. This has the effect of undermining the fairness and sustainability of our tax system, and it is therefore widely accepted, certainly across, I think, this House, that these rules need to be updated. Now, as I've mentioned, the government remains at the forefront of international efforts to secure a comprehensive long-term solution to this issue, and we are absolutely serious about continued and detailed engagement in discussions with OECD, G20 partners and, of course, EU nations among them on long-term solutions. The Honourable Lady for Glasgow Central talked about the importance of international cooperation. She's absolutely right about that. And it's been mentioned in this chamber already that the base erosion profit shifting work that we've done, we have been a leader on. The same is true in diverted profits tax, the same is true in the tax of intangible assets and the rest of it. So I do think it's important to in the spirit of fairness that actually members have shown in this debate, to recognise that. And it provides a basis on which we can then say that while we welcome recent progress towards global solutions, there are still a number of difficult and important issues which we need to resolve. And in relation to UK user generated value, that is what we are trying to do. But we're trying to do it in a fair and proportionate manner. We're introducing a new tax, and of course we only expect it to be temporary until appropriate global reform is in place. Madam Deputy Chairman, Clause 70 of the Finance Bill already requires the Government to review the DST in 2025 and to submit this review to Parliament. Now, it's important to note this review is intended to be broader than the narrow construction placed on it by the proposed new clause. Should the DST remain in place in 2025, the review will consider whether the DST continues to meet all its objectives, whether international form means that the DST is no longer required, but it will not just look at the net amount of cash brought in by the tax, although of course that's important. It will also look at whether it continues to be necessary in order to ensure fairness across the UK tax system insofar as it bears on that. I think that's important. And it is a government priority to try to secure, as I've said, a global solution, but we do so not merely from receipt of revenue, but also in the spirit of fairness. And once that solution is in place, the digital service tax will be removed. If I turn now to Amendments 18 and 19, Amendment 18 would require the government to produce a review of the digital services tax annually rather than 2025. Amendment 19 would require the review to include an assessment of the effect of the DST on tax revenues. Madam Deputy Speaker, a review in 2025 ensures that if the DST remains in place at that point, its continuing relevance will be given a full and proper consideration against the relevant circumstances then. It underlines thereby that it's the government's strong preference to agree and implement an appropriate global solution. Indeed, it places some impetus behind that agreement, and once that agreement is secured, to remove the DST as soon as possible, and certainly ideally before 2025. Additionally, as regards the need for Amendment 19, it's important to note that Her Majesty's Revenue and Customs already regularly report on the taxes they are responsible for collecting and the revenue they generate, and the DST will be no exception to this. It goes without saying that, as with all taxes, the government will keep this tax under review through annual budget processes and at other times, and therefore I would suggest these amendments are not necessary. If I turn to new clause 5, Madam Deputy Speaker, this would require the government to report to the House within 6 months of the Act passing the effect of the DST on tax revenues, and in particular the effect on the tax payable by the owners and employees of Scottish limited partnerships. However, and I think I'm right in saying this was very well picked up by my honourable friend, the member for Penistone and Stocksbridge, the report suggested by this new clause would not provide useful information. And that's for several reasons. The first is that the DST is a tax on groups, not on individuals, whether those are individual employees or individual owners. But also, digital services tax payments will not be required until after the end of the relevant accounting period of each liable group. For that reason, payments will not be required until 2021. And finally, the reporting deadlines in the legislation mean that very few groups will have needed to register, and no groups will have been required to send in their return within 6 months. And therefore, the report would not give useful information about digital services tax receipts during the period. I now come to the clause that I think the House has been most preoccupied with, which is the clause in the name of the Right Honourable Lady, the member for Barking, and my Right Honourable friend, the member for Sutton Coldfield. As it is tabled and it is amended, this clause would require all groups subject to the digital services tax to publish an annual group tax strategy, and alongside that also to publish their country-by-country report. Now, as I have said, this digital services tax is not an anti-avoidance measure. It is intended as a temporary response to concerns that the international corporate tax system has not adequately responded to digitisation. But In other ways, as you will be aware, the government has also championed already tax transparency both at home and abroad. And some of those ways were highlighted by my honourable friend in the moment of his speech and also by the Honourable Lady for Barking in many other contexts. And they're demonstrated and illustrated by the requirement introduced in 2016 for large businesses to publish their annual tax strategy containing detail on the business's approach to tax and on how it works with Her Majesty's Revenue and Customs. That requirement applies to UK companies with turnover over £200 million or a balance sheet of over £2 billion. And it's not limited to automated digital services businesses or to groups indeed with a UK headquarters. UK subsidiaries of foreign headquartered groups can also be required to produce such a report if that group has revenues exceeding €750 million and reports under the OECD country-by-country reporting framework. The effect of this is that many large businesses subject to the digital services tax will already be compliant with the UK requirement to publish an annual tax strategy, and therefore laying this new requirement on them, at least, would in practice have little or no impact. While thresholds may mean that some are not required to publish a strategy, this is an existing easement and it is unaffected by the digital services tax. Currently, as has been highlighted by many members across the Chamber, we do not require large businesses to publish their country-by-country report alongside their tax strategy. But of course, they can provide additional information, such as country-by-country reports, alongside that strategy on a voluntary basis. Nothing prevents them from doing that. And some have chosen to do so. And it's notable that in this country, UK headquartered groups such as Shell and Vodafone have taken an important lead in this area. And I would say to my honourable friend that I always pay very careful attention to what he says, and I always pay very careful attention to what the Honourable Lady for Barking says, and I have a great deal of respect for the principles that he and she have outlined through this amendment or clause. But what I should say is this. As regards the voluntary strategy at least, I am actively exploring ways in which the government can encourage other businesses over and above Shell, Vodafone and the like to follow suit. I would be delighted.
Very good. I'm surprised he says that this is not a method to try and bring companies that are avoiding tax to the tax table. A previous Chancellor, Philip Hammond, had said in a speech that these measures would effectively insist that the global internet giants contribute fairly to funding our public services. Isn't that reflective of a position where he felt these companies were avoiding tax?
I think one could put it a slightly different way, which is to say you don't have to take a position on avoiding tax to come to the view that this is a base of tax revenue which has not been adequately taxed and should be taxed. And if you do then follow that approach, you are, and here I will defer to the Honourable Lady for Wirral South, ipso facto, you are going to be levelling the playing field to a degree. Anti-avoidance measures are measures used in separate contexts to level the playing field as well.
Will you allow me?
Of course.
I'm most grateful to him for giving way, and he is getting to the meat of the matter in what he's saying now. But while he rightly extols the virtues of some very good companies which he named, which voluntarily publish whereabouts in the world their activity is taking place, where their profits are declared and where they're paying tax, by definition, if it's voluntary, those who are up to no good probably won't comply. And that's one of the reasons why publishing it in the way I set out in my earlier remarks is so important, because then if they don't comply, there's greater pressure on them, including the sanction of the law.
Well, of course, my honourable friend is absolutely right. And my point was a slightly different one, which is that in the first instance, and I haven't yet come to the thrust of what he's suggesting about mandation, but in the first instance, government should be seeking to support, promote, energise and activate more voluntary compliance, precisely in order to increase a public norm of voluntary reporting, which then does a lot of the job, even perhaps isolates the groups that then decide not to do that. And there are plenty of other contexts, I will say, there are plenty of other contexts in which that approach of voluntary then moving to mandatory has been quite successful, including in tax. Madam.
I'm grateful to the Minister for giving way. He talks about the voluntary nature of this. It's my understanding, however, that EU rules require some element of this to be reported. Could he clarify, is that the position, or is this entirely voluntary?
The answer is that what I'm talking about is a voluntary disclosure by those companies. I'm not aware that there is a separate EU requirement for them to do so. Certainly, it's the voluntary disclosure that is the thrust of what I'm talking about. And there may be other companies that have a capacity to make voluntary declarations that in fact, there are many other companies that would, and we are seeking to, and I am indicating in response to the Right Honourable Gentleman, my support for more of those companies to do that. But I'm only doing that as the preliminary to come to the point that he raises, which is about really about mandation. Now, the view that we've taken is that for the time being, this approach should remain voluntary, and further legislation is not needed until and unless we can get public country-by-country reporting agreed on a multilateral basis. Now, there's a specific set of reasons for that, which I just want to come to. The first is we really, and I'm sure my honourable friend feels the same way, we want the measure to be effective in meeting the objective of improving tax transparency. So a measure that had the effect of reducing tax transparency would be counterproductive. The worry here is that only multilateral implementation will give the comprehensive sets of information that are required on both UK-headquartered and foreign-headquartered multinationals required to deliver that. A unilateral approach risks being self-defeating and resulting in the publication of incomplete and indeed potentially misleading information about the activities of multinationals. It might also, and let me just, if I may, just finish for a second, it could also have the effect of ensuring that of allowing requirements to be avoided through group restructuring. We do not want to promote firms to undertake group restructuring in order to avoid disclosure and increased transparency requirements. And adopting public country-by-country reporting unilaterally has that risk and could result in groups moving their headquarters out of the UK to locations without a requirement to publish. Yes, of course.
So I sat very quietly and listened to the whole debate here, and I understand what the Minister's saying, and I actually think that he's right. So could he then just give us very briefly a sense of what work is going on within HMT to achieve the unilateral position that he says he wants?
If I've given that impression, I've given a misunderstanding. We are pushing for a multilateral approach, as I've indicated, through the OECD and through the G20, but also, of course, in consultation and collaboration with the EU. And the purpose of that is in order to achieve a sustainable approach that does not run the risk of creating incentives to restructure out of this country and thereby reducing tax transparency and effectiveness. And also, of course, reducing the impetus of tax transparency, because, of course, the more countries that are requiring it and having firms relocating or restructuring to avoid it, the less the impetus potentially exists to secure a multilateral solution. So, of course.
Thank you, Madam Deputy Speaker. Would the Minister be so kind as to give a rough deadline for the multilateral approach?
It's in the nature of these beasts that I cannot give a deadline to that, and I'm not sure anyone can give a deadline to it. I think it is a continuing debate. However, that does not mean that it's not one in which progress can be made, because as we've seen, for example, in some of the work that's been done with the OECD on minimum taxation levels, there has been clear evidence of progress in discussions within the OECD, and I think that's a matter of public record. Of course, but I do want to finish and give the honourable member.
I meant multilateral. I know having attended G7s and G20s in a health context when I was in the health department, clearly what is on the agenda for those G7, G20 meetings is obviously decided by who has the chair at that time. So could the Minister give us any sense of optimism that it is even on the agenda of those meetings to make the progress that I know he wants to see?
Well, Madam Chair will be aware that the way in which this works is that in between, first of all, the different organisations have different ways of working. G20 tends to work towards summits, OECD often a more continuous process. But also, of course, the most important work is always done in between in the official interactions that then set the terms, and often one doesn't know what exactly is going to be on the agenda until the last minute. So it's hard to give the specific undertakings. I'm not avoiding that. I simply don't think it's possible to give those undertakings. What I can tell him is that we are extremely keen to promote voluntary compliance, and we continue to press for a multilateral approach. And I will, of course, yeah.
I'm most grateful. It's been very generous about giving away. This is an ingenious argument that he is putting to the House about the restructuring. And I think it would be helpful if we might perhaps flesh that out in correspondence. But the argument between unilateral and multilateral is one that was very clear about open registers of beneficial ownership. The House obliged the government to accept that there was a case for going through the unilateral approach in order to get a multilateral approach. So I understand what he's saying today, but I think it would be helpful to flesh out this point about restructuring.
To raise some specific questions, of course, I'd be delighted to respond. Right, I'd be delighted to respond to them. I would say that there is a slight tension in his argument, which is because it contains the following two claims. One is that these international organisations are shape-shifting amoebas that constantly mutate in order to avoid tax, and the second is somehow that shape-shifting and amoebic quality is going to stop when it comes to thinking about how to react to a unilateral tax transparency initiative. So I'm so sorry, I've been really generous, but I have to finish. I have to allow the Honourable Lady to finish, and I've got an awful lot of other material, including clauses and amendments raised and contributions made by colleagues. And maybe a little bit later on, if I'm finishing, I don't know how much the Honourable Lady, how many minutes the Honourable Lady wants. If she gives me a bit more, okay, great. Well, let me in that case indulge, Lady.
Thank you very much, Madam Deputy Speaker. This information is already collected. This is just about making it transparent and open, just to make it public. This stuff is already there. You could give them, as I said in my speech, time to readjust if they did want to move stuff around. And just the question I wanted to ask him is, what is the incentive now to do the voluntary approach? What incentive is there at all for any multinational?
We know that the incentive that exists comes from all the reasons why we get voluntary compliance, a whole variety of different reasons. That is to say, groups with particular concerns, press organisations and companies. We all know how there's been a revolution in corporate social responsibility, and not in many ways an adequate revolution, because it doesn't extend in some respects to paying tax, as my honourable friend, the member for Thurston Moulton, would have highlighted had he been sitting behind me, or did in his speech. And then, of course, there's a role that government can have in terms of improving the norms and setting a bar that way. So I think it's actually it's a reasonable, staged approach. Let me just say also, if I may, a couple of things and wind up, and then I'll comment on what colleagues have said. It is important to have a level playing field for the reasons that I've described, and that applies in tax transparency as it does elsewhere. If a multinational group exceeding the country-by-country reporting threshold operates in the UK, then, as the Honourable Lady has said, HMRC will, in the vast majority of cases, already receive the report and is already using it for risk assessment purposes. And therefore, given this, we do not believe that it's appropriate at this point to introduce these new requirements at this stage. But I do understand the principles that the Honourable Gentleman and his Honourable Friend and the Honourable Lady have made, and I think, as this debate has shown, they're very widely shared. The argument we're having is over the nature of the approach and the implementation to a broad set of principles with which I think people generally concur across the Chamber. Let me say a couple of other quick things, if I may, Madam Deputy Speaker, and that is this. I'll just turn quickly to the comments made. The Honourable Lady has been very generous with her time opposite. I was very grateful. I've actually covered most of them in my remarks already. Yes, the debate touched on the issue of business rates, and rightly so. I think my friend, the member for Harrogate and Knaresborough, will know that we are publishing a business rates review which will specifically include online forms of taxation and invite public discussion on those. That's another part of the same process of trying to engage more widely and recruit not just information and knowledge, but also set expectations and norms about the way in which firms should be paying tax. The Honourable Lady opposite member for Ealing Central and Acton talked about sunlight being the best disinfectant, and she's right, but she was quoting Louis Brandeis. From 1914, who was dealing, if I may say so, with forms of corporate thuggery that make what we see today very modest by comparison. And finally, the Honourable Lady for, or the two others, the Honourable Lady for Wirral South talked about the distinction between justice in principle and justice in fact, and of course, she's absolutely right. And when you see the nature of the corporation, there is a view at the moment, and it's very widespread, more in America than in this country, even, that companies are run in the exclusive interest of their shareholders. That's not true in the UK. That's not, as a matter of legal fact, true in this country. The shareholders are entitled to the residual proceeds, but companies are run, and it's in the Corporation Act, in the interest of their members. And then the final point with the Honourable Member for Strangford, who made a very good point, and I think I'm right in saying Nation of Shopkeepers was coined by Adam Smith, but then I would say that, wouldn't I? And with that, I think I'll leave it, if I may.
Thank you, Madam Deputy Speaker. Having listened to the debate, we are keen that we need to see greater scrutiny and transparency in this area, and I'd seek to move Amendment 18.
The question is that Amendment 18 be made. As many as are of that opinion say aye. Aye. Of the contrary, no. No.